Hello and welcome to the look ahead for Tuesday, the 29th of October, with me, Fiona Sincossa, Senior Market Analyst at Citi Index. So, jumping in straight to the economic calendar, the European session is relatively quiet. Over in the US session, we'll be watching out for JOLTS job openings. Also, have oil API weekly crude stockpiles. As far as earnings are concerned, we'll be watching earnings from Alphabet, Visa, McDonald's, and AMD. This week is a really big week as far as what economic data is concerned for the US, but also earnings of the 100. And we've got 169 of the S&P 500 companies reporting this week, including big names such as Apple, Alphabet, Amazon, Meta, Microsoft. So yeah, lots of risk for investors to be watching out for. But let's just kick off with Alphabet. And I think what I'll be watching there is firstly the search engine revenue. Are we still seeing double-digit revenue growth in that sector? Also, then YouTube earnings, they were a little bit soft in Q2. Is that still the case in Q3? And then finally, the cloud business. I think, there is this broad expectation that anything cloud business related is expected to perform very well, with growth accelerating, revenue growth accelerating. So we'll be looking to see whether that is the case. Obviously here, Alphabet also infuse AI into a lot of their products. So again, across this earnings season for big tech, AI is going to be a big focus. As far as EPS is concerned, we're expecting EPS of 185, and that's on revenue of 86.22 billion. So just having a look here, this is the chart. As we can see, we reached that all-time high back in July, fell down in across the August and September. So we didn't see the same sort of recovery that we've seen perhaps in other stocks and in the broader S&P 500, but the recovery has happened. It picked up from the September lows of that just below 150 level. And we're now trading above the 200 SMA, but below the 100 SMA. So we're just caught between those two boundaries at the moment. So buyers are going to be looking for a rise above that 100 SMA, which is at the 168 levels, supported by the RSI above 50. A rise above there is going to open the door to that 177 level, which is the low that we saw in July, the high that we saw in May. On the downside, if we do get disappointing numbers, then watch out for 200 SMA down there at 160. A break below that's going to create a low and open that door back to that 150, 147 region, which was the low that we saw back in September. Just whilst we're sort of talking about earnings and what's going on as far as tech earnings are concerned, let's just have a look at what's going on with the S&P 500. Here we go, as we're heading into a pretty crucial week. Obviously we've talked about this. We've got all these earnings coming out. We've also got a lot of US data this week, including non-farm payrolls, core PCE, GDP, and we've also got the US elections. So there is a lot for investors to be mulling over and getting uncertain about as well, if it doesn't necessarily go the way that they're looking for. So as far as the S&P 500 is concerned, we can see that it's recovered from that low. This is what I was talking about, a bit different from the Alphabet chart. It recovered from the August low and has formed a series of higher highs and higher lows, including that sell-off in September didn't take out the August low on the S&P 500 as it did with the Alphabet share price. So we're still trading above this rising trend line, which dates back to early August. It's seeing sort of a little bit of consolidation really around these levels, which perhaps isn't that surprising given the amount of event risk that there is at the moment. So as far as what we'll be looking for, buyers are going to be looking for a rise above the 58.82 all-time high to head on towards 5,900 and 6,000 going forwards. But on the downside, I think, we've got last week's low, which was at that 57.60. That'll be the low, the level that sellers will look to take out in order to bring the October low in, which was around the 56.60 level. Just with other things that we're watching, I think we just have to take a quick look at what's going on in oil just after today's moves. I do say we've got the API oil inventory data tomorrow, but obviously we've had this big move today after the Israel retaliated at the weekend against Iran for the missile attacks from Iran earlier at the start of October. But the retaliation was actually much milder, perhaps, and has been downplayed by both sides and Iran as well. So it hasn't touched any. Israel didn't touch any energy infrastructure, oil or nuclear. So that's really just helped calm concerns over supply disruption in the Middle East, and perhaps potentially paves the way for a de-escalation of tensions, which has helped just remove the or see some of the risk premium on oil fade. Now, interestingly, oil slipped very, very sharply. It was down over 6% at one point, fell to a low there of just below 67. 67 is a level that we've been watching quite closely. That was a low we saw in September. We've also seen that low, that 67 low was also here, that we saw that a lot back in the middle of June 2023. So that's quite a level that we've been watching. Interestingly, it rebounded back above that level. So we're just going to see now what happens as far as 67 is concerned. I mean, if sellers are encouraged by the RSI below 50, obviously we are trading below the 50 SMA now, the 200 SMA, there's the downward trending trend line dating back longer term as well. So if we can get a break below that 67, a meaningful move below 67, then that's going to open the door to this low here, which was the level that we saw back in September. The 10th, which was 65, just above 65. So that would be the next level to watch down on the downside. If we do find that level holds and that we're sort of managing to stay above that rising trend line, just a near-term trend line at that, but then on the upside, next level is going to be 70 round number. And then we're back at this really sort of resistance zone between 150 and 250, which has been quite important over the past couple of months. Buyers really do need to get above that level to have any sense of negating the near-term downtrend. Other things to be watching out for. We said that we've got the US jobs openings. I'm just going to pull out with the UK, the pound US dollar. I don't think we're going to see too much movement here, just because on the pound side there is so much caution ahead of Wednesday's budget. But there is a lot going on, I think, on the surface for the US dollar ahead of that budget. So we've got obviously the jobs openings, which is going to be very much in focus ahead of the non-farm payroll data on Friday. We do have other job reports across the week, such as the ADP payroll, and also, as I said, we've got the core PCE, which is that Fed's preferred labor inflation data, as well as GDP data. So, but I think, we've got, as I said, we've got that budget on Wednesday. That's going to probably prevent, the cautiousness is probably going to prevent the pound from moving really too far above 130 at all, if it even gets there, if we see any weakness in the US dollar. But I think, as long as we see solid numbers from the US dollar, it's just going to support that view that the Fed is going to be cutting interest rates slightly slower pace. 25 basis point cut is pretty much fully priced in for November, but we could see the brakes go on those rate cuts if the data continues to come in strongly across from the US. But just finally, one more one to look at, I think really interesting one to be watching, is the Japanese yen. A lot going on as far as the yen is concerned. Not only have we got that strengthening of the US dollar, which has been showing up very, very well in this chart, we've also seen a weakening of the US dollar, just of the Japanese yen, because of doubts over the Bank of Japan's ability to hike interest rates. And obviously with the elections that we've had over the weekend in Japan as well, there is a sense that there could be less possibility or less likelihood of a Bank of Japan hike as well. Sorry, so many cuts, and then the Japan is hiking. So yes, we've seen this move above the 200 SMA now. We're just testing the 61.8% fib retracement from the 162 high to the 139 low. If we can get a move above that, then that's really next going to bring in to 155 round number, and then the 157, which is the 78.6% fib retracement. As far as support is concerned, you've got the 200 SMA there at 151.37. Below that, you've got the 150 round number to be watching out for as well. So that is everything from me. I hope you've liked what you've seen, and if you have, then please do give this video a like. If you'd like to receive more like it, then please do subscribe.